Alright guys, so this is a brief tutorial on how to measure your risk to reward using the position tool on TradingView. Alright, so for those of y'all who understand TradingView and the tools, you can go to the left side here and you'll see the tools, right? So 1, 2, 3, 4, 5, 6, 7 slots down. You hit the arrow and you'll see a long position and short position. To save yourself some time from going to the side and searching for all of these tools over and over again, all you have to do is click the star button. If you click on the star, it will automatically populate into this tool and it will show up on your chart. All right, so this is what I use. These are a lot of tools that I use very, very faithfully, and I don't have to keep going over here and looking for anything. It's all right here for me. So for position tools, let's say for instance, and I'm going to do a couple examples, right? We're using Facebook. Okay, so if we're using everything that we learned in this previous course and we go back and we look at Facebook, we're trying to see if we can get an entry on Facebook after a stage 1 consolidation into a stage 2 breakout, and we want to make sure that we measure our returns with our support and resistance levels that we use from just trading and looking at the chart and market structure. Okay, so off the bat, I can already see that the support level has been established here, and what I would do is I might mark this out so I have it to see. All right, visually is very important for you to see, so you need to make sense out of all the madness here with all of this with all these charts and this price movement, right? So you have to do whatever's necessary for you to make sense of the madness. Okay, so I have a resistance level here from previous price movement. All right, I'll notate that. I have a resistance level here from previous price movement, and these, all I'm doing right now is I'm measuring the high points. All right, the extreme high points on the chart. I'm making sure that I notate them and I keep them on my records by measuring them out with this on this rectangle tool. Okay, so here, all right, so I got a few resistance levels here, 1, 2, and 3. Okay, and I got a support level here. So basically what I'm saying is, if I can find my way into this stock at the right time, I will have the opportunity to get a few take profit levels, all right, before I start thinking about getting out of the trade. Okay, so now how can I make sure that I get in at the right time? By measuring my risk to reward, by using the position tool. So here I'm going to go to the long position, right? So you click one time and then you find your position on the chart and then you click another time, right? So just 2 clicks, boom, and it's there. Okay, now obviously you can go into the gear symbol, change the parameters, change the colors, change the price labels and all that, right? But for the most part, I'm keeping it pretty the same. All I have to do is click on the top part and I'm able to move this up and down, right? So let's just say, for instance, my first take profit is here at about $286.89, and it's at a resistance level, and it was established by previous price movement hitting up against this level and bouncing down, right? Where's my stop loss, right? So this is my support level, and like I said before, it's best for you to put your stop loss at or below the support level. I like to put it below the support level, right? So now I have to look at my position tool to see if my risk to reward ratio makes sense. Risk to reward ratio is 1.54. Basically what that means is I have 7.73% gain and 5.0% risk. So my risk to reward makes sense because I'm risking 5% in order to make 7.73%. I'm risking this amount to make a higher amount. That is a good position to take. Now, obviously, this isn't a 2-to-1, right? I would like to get a 2-to-1, but I'm not going to force a 2-to-1. I'm going to make it make sense by using resistance. So maybe this might be my first target. What if I extend this to my second target? If I extend this to my second target, now I'm looking at a 2-to-1 risk to reward ratio where I risked 5% in order to get myself a 10% or higher gain. That is a good position to take, right? So now we have to look at the entry, which is the middle part, this gray line, right? And I'm able to move this around however I'll need to. And at this particular point, you see the price actually dropping. So that will give me the opportunity to drop my entry point. Now, when I when I go into my brokerage account, whether I'm using Robinhood or I'm using TD Ameritrade, E-Trade, Fidelity, whatever I decide to use, M1 Finance, whatever I decide to use, I have to find a good quote and try to get in at the right price. Once I get in at that price, I go to my brokerage account and I look at the price that I purchased at, and then I go into TradingView and make sure I put the position tool exactly where my entry is on my brokerage account. So I will hit the gear symbol, I will go into inputs, and I will go down to entry price and make sure I type in the exact number that I purchased it at in my brokerage account, right? Same thing goes for stop loss, same thing goes for take profit. Now, when I'm in my brokerage account, it's not gonna say, it's not gonna only say stop loss. It might say stop limit order, right? So if you see stop limit order, what that means is stop loss. And you're gonna have two prices to input. All right, so you're gonna put your original stop loss price, which is like $252.96, and then you're gonna have a trigger price, which should be a little bit higher than that $252.96. So maybe your trigger price is right here at the support level marked by this rectangle here, and then the initial stop loss price would be the original price that your position tool has, right? And then the same thing for your take profit. Your take profit is a sell point. Now, normally what I do in my brokerage account, I normally don't set my take profit in my account automatically. I normally just set my entry and my take and my stop loss, and then I let the price run, and then I manually exit the trade, right? But you can choose to do that, or you could do it the other way. I like to manually exit because sometimes I like to look and see what the momentum of the stock is actually showing me before I commit to getting out at that particular price, because sometimes the price can continue to run and all the signs will be available for you to see if the price is going to continue to run. And if you already have your take profit set in your account, you get out of the trade before you give yourself the opportunity to make that additional profit, and you're just sitting back watching that stock run off, and you'll be pretty upset about losing that opportunity. So I won't put my take profit in my account, but I will absolutely 100% step my stop loss every single time. All right, so let's just see what happens. All right, so now we in the trade. All right, and we start to go up. Okay, boom. Now the first take profit got hit. So at that point, you can decide if you want to trim your position a little bit, maybe trim half of your position or a fraction of your position, take some of your profits off the table. So in this case, maybe you purchase 5 or 6 shares of Facebook, and then it hits your first take profit. Maybe you sell 1 or 2 shares and keep the rest on the table, right? Maybe you even put yourself in a position to where you extend your take profit all the way up to the high point, right? Now your risk to reward ratio has increased to 3-to-1 instead of a 2-to-1 or a 1-to-1, right? So now you keep moving forward and see what actually happened, right? So now you saw that the price went above and beyond your first take profit, went all the way up to your second take profit and rejected. This is a strong resistance level that we already had in our minds, and we put that on the chart by using this rectangle tool, right? And now we see how the price has reacted to that resistance level, is rejected, and it came down. So if you would have took profit here, you would have got out of the trade at a profit and you would have been good. If you didn't take profit, now you have to see what's gonna happen with this stock price moving forward. Nothing happened, right? If you increased your take profit and you didn't get out of the trade at all and you're still in, there's no reason for you to make any adjustments up until this point. Maybe you can adjust your stop loss now and lock in some of those profits to make sure that you don't get yourself in a position to where you're losing money. Maybe you move your stop loss up here, so that way if it does come all the way down, you at least get some money out of the equation. Or maybe you just leave it because you're confident that Facebook will continue to run in the future, right? So now you got a brief pause, a brief pullback, and boom, now it all went all the way up to your third take profit level, right? And again, and like I said, you have to make these positions make sense. You can't just tell yourself that a take profit level is there because you think it's there. You have to use market structure. You have to use previous price movements. You have to use your resistance and support levels every single time. And obviously we're going back in time, so it's easy for me to say, oh, there's a level, here's a level, here's a level. But if you rewind what I did, all I did was look at the high points and the extreme rejections and mark those as resistance levels. And if I mark those as resistance levels, you see that the price has responded to almost each one of those levels and gave me an opportunity to take profit 3 times. All right, off of one entry. And then obviously it went above and beyond those levels. And then they even came back to give you even more confirmation on each of those levels again. So that lets you know that those levels were really good. And in this particular case, you would have made a 14.87% return and risked only about 5% to get that. That right there is a perfect position for you to take. All right, so let's keep going. All right, and that stage 1, stage 2 breakout. All right, stage 3, stage 4 consolidation. Pause. We could have came back in here. We could have came back in here. So there's always going to give you opportunities if you're using these market structure and market cycle examples. Let's look at another popular stock like Amazon. All right, that'll be the last example. Here you already see I had a position on Amazon. So let's rewind time and go back and see what exactly I was looking at and why I decided to jump into that particular position. Clearly you can see the market structure. All right, if you guys want to get a little bit more in detail about market structure, I'm gonna have a market structure course available for you, where you will get this spreadsheet, this handout right here, all right, this PDF, and it will break down each stage of the market for you, and we'll go into more detail about that in the market structure and market cycle course. If you're interested in that, make sure you go to bstuniversity.com and sign up. All right, so here you have stage 1 consolidation, stage 2 breakout uptrend. All right, stage 3 consolidation. Okay, stage 4 retracement, stage 4 decline. Right, now we back into a stage 1. I'm looking for the price to cross over the 50 moving average and cross over the 20 moving average to get ready for an entry. My take profit level is at the previous high, which is the resistance level, huge rejection, right? My stop loss is below the support level, where the support level should be right by here. But in this particular case, I'm looking at the moving averages. So I put my stop loss below the moving average, and I'm not going to get into the trade until the moving average gets cleared and crossed, right? So if we move over to the next day, you can see we had a huge gap in price, and this is the day that I entered on Amazon, all right? I put my stop loss below the support level of the moving averages. Basically what I'm saying is, if the price goes down and I'm wrong about this particular trade, I'm going to exit the trade if the moving averages get crossed over again, right? So in this case, you saw the 20 moving average got rejected, right? Price came down, looked like it breached the 50 moving average. I still have the 200 moving average here, and my stop loss is below the 200 moving average. All right, now you see the price actually came down below the 200 moving average, but since my stop loss was under support, I didn't get stopped out, and I'm still in the trade. All right, now it's fluctuating, going back and forth. This is a clear stage 1, going into a stage 2 breakout, crossing over the 20 moving average. The 20 moving average got rejected again. All right, support at the 200. You see support got broken, but my stop loss is below support level, so I'm still in the trade. And now you see I got a strong wick right here. I'm still in, and then price jumped up and went straight into a stage 2 breakout, and now we off for the races. All right, so now first take profit level got hit here. All right, and once the take profit got hit on the first, we already got into a high level of on the RSI up until a 70% level, which is an overbought territory, and it was about time for us to go ahead and exit that trade, take our profits, and move into a different position. All right, and now you can see Amazon going to a stage 3 consolidation, and then boom, back into a stage 2. So in this particular case, I could have had a higher take profit level, but it wouldn't have made sense because there's no previous price movement that would justify a higher take profit level unless I'm using another strategy with trading. Maybe I would use the Fibonacci retracement tool or something that would give me a higher take profit. If you're interested in what that would look like, I will go from the low point, all the way swing low to swing high, right? And then you see the retracement. The retracement comes here after the rejection. All right, it retraced all the way down to the 50% level, which is the golden zone. And if we're using the Fibonacci retracement tool correctly, you can see that our targets are going to be here at the 100% level and here at the 27% level. And if we let it play out, you can see that Amazon actually went all the way up to the Fibonacci extension level of 27, spot on. All right, so that right there would be another course that we have available, the Fibonacci code, and we will teach you how to use the Fibonacci retracement tool to add more wins to your trading journey, but also make you a more profitable trader by using these methods that a lot of experienced traders use. Okay, so those are two examples using Facebook and Amazon on how to properly use the position tool going in the long direction, and what a good take profit and good stop loss area should be, and how to measure the position. In this particular scenario, we had over a 2-to-1 risk to reward ratio, meaning I wanted to risk 3.15% in order to gain 7.72%. I was very successful on this trade, and the risk to reward ratio was basically perfect. All right. So if you have any more questions about that, make sure you contact us. Again, we have one-on-one mentorship available. We have one-on-one mentorship available, and we also have the VIP membership available for anybody that's interested. Make sure you go to bstuniversity.com, and you'll be able to get into either one of those or both. All right. Thanks a lot. Hope you guys enjoy. Good luck.